The opening gaps plus breaker indicator sub is designed for the ICT trading style and is available for various platforms on the TradingFinder website. From this section, you can download the indicator file for the MetaTrader 4 and MetaTrader 5 platforms and run it on the EON chart. Traders can also visit this page to learn how the indicator works. We select the indicator file from the Navigator section, CQ bars val, and apply the indicator to the chart by dragging the file onto it. Just make sure to check the box next to Enable this portso in the comment section, and then click the Confirm button. Once the indicator is on the chart, it starts identifying and drawing the open gaps on the price chart. The Open Gaps Plus indicator by Riker is a handy tool suitable for ICT style traders to easily identify daily and weekly open gaps on the chart. In this section, in the previous day's candle, the price opened at this level and closed at this level. In today's candle, the price opened at this level after the previous day's candle closed, which is the distance between the close and the open. Certainly identify the new day as a daily opening gap and draw a green area O as a support area. Traders can use the green ranges as support levels if the price returns to these areas, allowing them to conduct more specialized analyses on the chart. In the candle from a few days ago, the price opened at this level, closed at this level, and then opened again at this level the next day before closing at this level when the candle closed at this level and the price opens above the closing level. This range is identified as a support range and is displayed in green. However, if the price returns downwards, i.e. in a way that when a resistance level is broken once or a support level is broken once, its nature changes, shifting from support to resistance and from resistance to support. Here, it has changed from a support level to a resistance level. For better understanding, let's look at the settings. In this section of my blog, I disable the display of daily opening gaps and set the display of weekly opening gaps to a period of 10. Here the price has moved upward. Our closing price was at this level, and the price of the new candlestick at this level has identified the gap between the closing and the new candlestick in the new week as the weekly opening gap for us and displayed it with a green box. However, with the price moving upwards in the new week, the price will break out of this level. It closed at this level and opened at this level, then moved downward. Our support range here changes its nature from support to resistance and is displayed in brown. Here, a breaker mode has occurred for us, and when the price closes below the support range, or when the price closes above the resistance range, they reveal their nature. They change from support to resistance and from resistance to support. We consider this situation as a breaker and identify the ranges in the settings section. In the input section, there are options for us where, in the first part, you can set the period for displaying new daily opening gaps, which is set to 10 by default. In the next section, you can enable or disable the display of new daily chat openings. In the next section, you can select the period for opening the new week's gaps, which is usually the number of 5 digits. Finally, in this section, you can enable or disable the display or non-display of the new week's gaps. And in the last section, in this section, you can determine how to draw the open gap boxes. By default, I first select the 4-line mode and then click OK. As you can see here, the way the boxes are drawn has changed. It only shows me part of the box and draws the extension of the box as a dotted line. If any of the support or resistance levels are broken, their nature changes, and if they break, for the second time, that level becomes invalid and is removed from the chart. Well, friends, we've reached the end of this indicator tutorial. We would be happy if you share your comments and suggestions with us in the comments section.